Hello, what is the difference between a Roth IRA and a brokerage account? Then we can do chart analysis of ULTA. Well, your brokerage account is taxable. It could be individual brokerage account or a joint brokerage account. It is taxable. So therefore, you are going to be calculating estimated tax on a quarterly basis and pay to IRS and your state. Roth IRA is a retirement account, and in all three, you can swing trade stocks in them. In your Roth IRA, or the Roth IRA, you are now going to be paying tax on your profits there, and you need to have your Roth IRA open for at least 5 years before you can start taking money out. And money you can take out will be your capital, not the profit, unless you reach the age required by the government. Otherwise, you will be penalized. So Roth IRA has some regulations to it. So, and there is a contribution you have to do, like a maximum that you should not go over. And for the Roth IRA, it is after tax money you are putting in the Roth IRA, but when you are taking money out later, you will, I think it's like 59 years old and a half or so, that you can take money out without being penalized. But you can read a little bit about the here, if we can make this a little bit big, but you can contribute until, you reach 70 and a half, and you can leave money there and take it out anytime you want. The thing is with Roth, when you are filing your 1040, the money you are taking out of your Roth IRA, you are not going to put that on your 1040. It's not, if I recall right, it's not going to be a part of your taxable income. So I think that's a good thing as well. So regardless of how much you are taking out of your Roth IRA, it's not going to be taken into consideration when determining your taxable income after you retire. And your profit in your Roth is not taxable. But keep in mind that if you are trading LLCs, you are investing in LLC or partnership companies in your Roth IRA, your brokerage firm is going to file a tax return on your behalf. I believe it's 990. Every year you'll get Schedule K from the company. You send it to your brokerage firm and they will file that form for you. And depending on the nature of that LLC, not common, but it can happen that you might pay tax. So therefore, I just don't like to deal with those LLCs. If you're investing in, you are trading LLC or investing in them in your brokerage account, you still need to wait for those Schedule K1 before you file your tax return, and you'll get them around March. So you have to wait on them to file your 1040. So we can see about how much you can contribute to your Roth IRA a year is $7,000 as of last year, unless you are 50 years old and older. There is an additional 1,000 that you can benefit from. And if we scroll down, they have a little bit of information here. Okay, so if you have employer retirement plan that you are contributing to at work, you can still contribute to your Roth IRA. I think there is a limit, a salary limit that could kick you out of being qualified for IRA. But other than that, even if you have employer if you have a 401k with your employer or 403b or so, you can still contribute to your Roth IRA. But if you want to have traditional IRA, I think the deduction a year will be reduced. There will be a limit on that. But you can still, read through it. You just search it on irs.gov, Roth IRA, and read through it. But those are just the things. And if we can see the income level that can kick you out of being qualified for it, that would be good. Let's see. If I can find, this is the contribution limit, but does not give us, it's not really what I'm looking for, but I think it's more like a little bit getting close to $300,000 a year as if you are filing a joint return, like for the household, for you and your spouse. I think around that level, $288,000 a year for combined income. Anything over that, I think that is when you may not qualify for a Roth IRA. But again, don't quote me on that. I don't like to memorize those rules, but you just have to, search that maximum level to see it. But that is the difference between the Roth IRA and the brokerage account. The brokerage account is taxable, the Roth IRA is not. But with the Roth IRA, you cannot touch that money. I'm not even sure why I'm not seeing enough information in here for it. You cannot touch that money until you reach 59 years old. And again, I'm not seeing that information here. So you can see for the Roth IRA contribution, if you are filing, a joint return, and you have your AGI is 230,000 or is 240,000, you cannot make a Roth IRA contribution. So if you and your spouse, you bring home before tax, AGI, just gross income, you have to find out on your tax return that line is $240,000, then you cannot contribute to Roth IRA. So that is that. And I like to see when you can take money out of Roth tax free as well. That is important as well. And I think it's 59 years old. And again, I'm not seeing it here very quickly. But that is an important fact as well. To know about Roth IRA. So the things with the Roth is a retirement account. So therefore, you cannot tap into that money if you need it now and you have not retired yet. Like that age, you have not reached that age yet. So I'm not seeing 59 here. I'm seeing those ages in the 70s, but I think it will be more for the traditional one though. So, but again, do your own research on that. for the Roth. And one thing that is what is good about Roth IRA. You are not going to pay tax on it on the profit when you are taking it out. What I don't like about it is when you are taking money out before that, you know, age level, you have to file an additional return with your 1040 to prove that the money you took out is the capital that you invested in. Whatever you took out is within your principal, is your profit. You are not touching that, otherwise you pay a penalty for it. So, and one thing I like about the brokerage account is even though it's taxable, you can touch the money anytime. So if you are trying to create a stream of income outside of your job, having a brokerage account where you can do that and touch the money anytime you want is great. But keep in mind that whether you sell the stock or not, if the stock pay you dividend, you are going to pay tax on that. If when you buy stocks, you don't pay tax. When you sell the stock and you sell it for profit, that profit, whether you took it out or you kept it in your account, you are going to pay tax on it in your brokerage account. So your profit and your dividend income in your brokerage account is taxable. You are going to report that on your 1040 when you file your taxes, and you are going to be tracking your profit and your dividend income throughout the year so that you can estimate the estimated tax return, the estimated tax to pay on a quarterly basis. Again, quickly here, I'm not seeing Roth IRA information here, but it's all about clicking around, Googling it, and you'll be able to find that information. So that is the difference between the two, the big difference between the two. And personally, I have both, but I focus on growing our brokerage account so that we can have another stream of income outside of our job. And what I like about it is we can take money out of it. You can take money out of your brokerage account to fund a rental property, for as a down payment for your rental property. For instance, you can take money out of it to, like, the portion of the profit, for instance, to pay for your kids' education, for instance, or it can be a way for you to save and trade stocks with the idea that the profit will be used to fund a certain lifestyle of yours. It could be to buy a car when the current car you are using, is done. We are going to change it. Instead of saving that money over the years and keep it in your checking account, it could be in your saving account. It could be in your brokerage account. As you are trading, making profits, the profit from there, you could use it, for some renovation in your house, or to buy, it could be to renew your sofa, your couches, or to buy a car. Those kind of big ticket items, or even the siding, replace the siding around your house, or things like that. To do things like that around those kind of big ticket items that you prefer, knowing that those things at some point you do it in your house. You can decide that you are going to trade stocks over the years, and the profit from it, you take that profit and do those things instead of using your hard-earned money to save it to do those things, you will trade it and use the profit to do those things. So that is one way to view as well. So I'm trying to build our brokerage account so that it can have a good amount in it, and therefore to be able to grow it fast, I shift away from the Roth IRA contribution. So we are now meeting that $7,000 Roth IRA contribution, minimum contribution a year. We are not doing that, my husband and I, even though we have brokerage, we have a Roth IRA, and I don't think we ever met that threshold any year since we have those Roth IRA. But there are some years we contributed more toward the Roth IRA than now, and in some way it's good to contribute to it. But again, trying to do everything at the same time, it takes time to build momentum, or to build to reach the goal you are trying to reach, because you are spreading your resources over multiple things. So you just have to see at the age level you are which way you want to go. So because again, Roth IRA is something you can have while you have a job, and so there is a time is time sensitive, but at the same time, putting $7,000 there for you and $7,000 for your spouse, that is $14,000 less you will have in your brokerage account if you are trying to build your brokerage account, so that you can have it as a source of income outside of your job, so that your job is not the only source of income you have. You just have to see. So I just feel like, because again, we are learning and doing this financing, so we pay off debt, and now we are trying to get to our financial independence level, build wealth. And I'm 47 years old, and my husband is 48 years old. So we just cannot do it all. So you just have to see, at your age level, which way is going to be, or based on your salary, if you can afford to contribute to both, reach that $7,000 a year in your Roth and your spouse Roth IRA, and then still build up your brokerage account. You just have to see. With many people losing their job these days, it's good to have a backup plan, have a way, a source of income you can rely on that is not your job. So while you have a job, it's good you see if you can you can have some cash left after you pay for your monthly expenses and save for your irregular expenses. If you can have some to invest, whether it is in your brokerage account or Roth, you have to decide, so that if it's in your brokerage account, you can build it to that level that you know that as you are trading the profits from that, you are going to keep analyzing it to see if it's going to help you reach that goal, where you have, you can have you can say that, oh, I have a source of income here. So if we take an example here of last year, 2025, and we can see we made about $18,000 that year, and our monthly expenses is about $1,500 a month. But it does not include irregular expenses that we pay for during the year, but not on a monthly basis. It does not include those ones. So utility and all those, groceries and car gas and all those, $1,500 a month. And as you can see, our swing trading profit from our swing trading, there are some months that we exceed that 1,500, some months that we didn't, some months that we didn't bring anything in because we didn't sell any stock, and some months that we are very short, some months that we double it, some months that we are close, and some months that we are very little, and again some months that we didn't bring any in. So but it is a process, and it's not about getting it down very quickly or anything like that either. I like to do things step by step and enjoy the process. It is a journey, and keep improving and keep doing it. But I just prefer to put our resources in the brokerage, building the brokerage account capital to the level that I will be able to buy more shares of stocks when I buy them, so that when I sell them, I can make more profit from there as well. So, and it was the reason why I'm now investing in the Roth IRA, and we have 3 kids, and one is in high school, so pretty much close in few years she's going to be in college, and we will be paying for her college tuition. So having a brokerage account, profit from there, we will be able to pay for that tuition, so that we can keep putting our money in our brokerage account, keep trading, and keep using the profit to pay for that tuition is the goal. So, and then yes, sometimes I will ask myself, now contributing to our Roth IRA, so that we can benefit for that tax-free income when we take money out of there, am I doing the right things? But I just know that trying to do it all, I will take more time to build this account, when soon in the horizon we'll have tuition payment, and before you know it, the second one will reach that level as well. I will have 2 kids at the college level to pay, tuition for. So we all are at different stages of our life, so you just have to see, you know um, which way you want to do it. It's not that one way is the best way. It's just that you just have to pick and live with it. It may not be the right decision, but it will be the right decision at the time you are picking it, because that's the decision you thought was the right one. So personally, that's the way I've just. So when I have a little save on my own, I tend to put that in our Roth. So I'm contributing a little bit. Last year I contributed a little bit there, but nothing close to what I can contribute there, because again I want to put all our energy in our brokerage account. And last year I didn't invest a lot in our brokerage account because we had to save money to replace the roof, and the year before that we replaced the siding. So those are big ticket items, and this year I like to put more effort in to put more money in our brokerage account. And again, the next step will be a rental property, and be able to pull money from this account and fund that project is a goal as well. So you just have to see, what works for you. Today we are going to analyze ULTA. Is it a buy? Today is January 12, 2026. We have the date on the x-axis from the past to the present, and the price on the y-axis from 0 up. ULTA is not a buy today. And why is that? Well, it's going up, not going down, and we like to buy at the valley line, the support line supporting the bottom of the jaw, passing by the higher lows, and right now the price is far from it. Last time the market opened, it closed on green. the price at the end of the day was higher than the price in the morning when the markets open. So it touched base with that support line in 2025 and has been going up ever since. So it's not a buy today based on the strategy we are using to swing trade. So thank you so much for your time. We thank you very much for all your comments, and thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on your job to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. The way we analyze ULTA is the same way you do your chart analysis. If you are using trend line swing trading strategy, option line swing trading strategy, if you want to practice analyzing stocks and get feedback on the way you are doing it, please check our small group online workshop at libermandownload.com to see if you like it and reserve a spot. The next one is next coming Saturday. Thank you so much for your time. The link is in the description of this video, as well as the links of the playlist where you can find this video series and more in videos. You can find more videos in this series as well. And we have other swing trading playlists in the description of this video for you as well. Thank you so much for your time.